Roger, I wonder, from a person who has sat behind the desk, behind those doors at the Fed, what exactly is your feeling about whether or not these attacks should be happening against the Fed right now?
Oh, obviously, as with most people who have been following the independent central bank for years, I do not think these attacks should be happening. You just played a piece from my friend Austin Goolsbee, the president of the Chicago Fed. I agree with him wholeheartedly. It is unwise to call into question the independence of the Federal Reserve System, as it is to call into question the independence of any central bank. We've learned that credibility at the central bank is critical to exercising monetary policy and to creating, trust and confidence in the U.S. economy.
Roger, we've attributed much of what's been happening with the volatility in the markets to tariff policy, other perceived policies coming from the White House, perhaps down the line. From the Federal Reserve standpoint, I wonder how much you think things could change if these attacks on central bank independence continue. Just how bad could the market volatility get?
Well, I think it could continue quite dramatically. We've already seen, international investors call into question, perhaps, the stability and reserve currency nature of the dollar. It is unusual to have equity markets down and the dollar go down as well. Normally, when equity markets are down, individuals look for dollars in order to buy, the fixed income, the riskless asset that the U.S. offers in terms of our treasuries. There's been less of that of late, and I think that kind of thing could get even worse. There are more and more newspaper articles starting to talk about, the weakness of the dollar as a sign that maybe its reserve currency status, while probably unchallenged, maybe has been questioned a little bit, and that has never occurred. So I think this is moving us in the wrong direction vis-a-vis international investors and people who believe the dollar as a reserve currency of the U.S.
Roger, this is coming from a place where I don't believe, and I don't think many people do, that there's any real threat imminently to the value of the U.S. dollar in terms of its reserve currency status, in terms of its safe haven status. But longer term, what exactly does it mean? Do you feel as though this could have a real market effect on the attractiveness of U.S. assets if this policy type, regime continues against not just the Fed, but perhaps on the trade front as well?
Well, look, I agree with you that it seems highly unlikely, I'd say remote, that the dollar would lose its reserve currency status. For one thing, there's not a currency there that seems likely to replace it. On the other hand, the fact that we're even talking about it is a dramatic shift in regime. Normally it's not even something to be questioned. It's not the kind of thing that you read about in serious, papers or in serious TV shows such as this one. So it certainly is weakening the perspective that the dollar is, going to be insurmountable for years and years to come. So I agree with you, seems highly unlikely. There's not an alternative on the horizon, but it's inappropriate or unfortunate to even, have a series of policies that are allowing serious people such as yourself to call into question whether or not the reserve currency status will remain.
Roger, before we let you go, I've got one question that I've heard a lot of folks, at least the ones I've talked to, ask, at least talk about or debate. Why is the Fed, why is Chair Jay Powell, why are they not able or willing to cut interest rates the way that President Trump wants them to be cut?
Because they've got a mandate that says they should focus on, stable prices, low interest rates and low inflation. And the issue, obviously, is that inflation expectations by some measures have been rising. The last several measures that we've had of actual inflation have not all been consistent with the notion of moving towards a 2%, inflation target. And you hear everyone saying that the tariff discussion is both raising the prospects of future inflation while also the prospects of slowing the economy. So I think the Fed's stuck in a difficult situation where they're talking about stagflation. And in that environment, I think, first, they should focus on getting inflation under control. And secondly, they certainly should not be cutting rates, which, if anything, will add fuel to the inflationary fire. So, their mandate, I think, precludes them from cutting rates at this stage, and depending on how things play out, calling for them to hold rates stable or possibly even increasing rates if they see a rise in inflation or inflation expectations that's taking all of us away from the desired 2% inflation target.